So I want this price to fall over here. From here it can go up, right? Because it is manipulated from here, but it can go down and take the liquidity. Okay. So
Also, yeah.
by this on my daily analysis, then I fall back to 15-minute time frame. Like you can go to 4H, 1H, or whatever time frame suits you, right? Like what type of trader you are. Like, are you a swing trader, or right? Like if you are a swing trader, you will be trading on 1 hour or 4H time frame over here. But we are like New York session traders, and
Yeah,
in
and I am
out.
also a little bit a scalper.
Yeah,
I
so
like
that's why, because it's quick money, right? So I fall back to 15-minute time frame. Then same analogy like which we did over there on daily time frame. Can you see the buy side liquidity over here?
Yeah. Here exactly now. He was on. Yeah, here. Yeah.
Wait. The settings have gone, man. Like, wait, hold on. Yeah. This is the buy side liquidity. So over here at 7 o'clock in the morning of New York time, the London session ends, right? As you can see the time.
Yeah. Now I have to, because we changed the time. I have to now thinking, because I didn't know how you do. And 7 o'clock in the morning is the end of the session. Yeah.
Yeah. So now what we are looking for? We are looking for this liquidity to break and give a sell off. And where is the sell side liquidity? Can you see it?
On the left. This is the Asian session, or what's this?
Over here.
This is the Asian session or what?
Well, like I didn't got you.
This is the Asian session.
Yeah, this is the New York session. Like,
yeah.
So we will see for the liquidity, right? So where's the liquidity? Over here. Over here the liquidity is. I should change. This is the sell side liquidity, right? So from this perspective, let's just fuck, like, yeah, what's the date today? 28, right? Premium is ended, man. I will have to take that. So we will do hindsight today. Okay. No replay. No. So see, on correct market open, which I told you, like 8 o'clock market opens, okay? And on correct 8 o'clock, it went to the liquidity, algorithm pushed into the liquidity, and after the liquidity you can see the sell off clearly to the sell side liquidity, and we exited over here. I will tell you why we exited over here, okay? And then it went up to fill the gap, and then it gives one more push, and then it starts consolidating in afternoon session, okay? But we will see the trade over here, okay? Because I gave 3 signals, right, on the Discord to take trades.
Yes.
One was break even and 2 of them were winners. So you got the buy side liquidity, that what's the buy side liquidity and what's the sell side liquidity, right? You got it, because we are going into little bit advanced.
Yeah, of course.
Okay, so yeah, so we are going into advanced, so pay attention, right? Because over here to see the gap and take the trade, it's very hard, I'm saying, because if you have full focus over here, then only you will be able to take the trade, right? So what I saw, market pushed up, it went down, so this was the 2 equal lows. Can you see? Because we will have to see in a closer perspective, okay? And this you will have a lot of time over here to think what should I do, because on day then it went up, we did nothing, and when it shots down over here, like the 3 candle I told you, right? We have to see these 3 candles, and then can you see the gap?
Yeah, it's small.
And can you see the order block? There are 2 things in this, man. See, there is a gap also, and there is an order block also in this. I should remove this. This is the fair value gap over here, okay? This is the fair value gap. Why I did not took this fair value gap, which is below over here? Because I want little bit sharp entry though, and I know it's gold, right? Gold is too much volatile, so it can give these type of moves. So you should have a safe stop loss above this or above this, because at New York session the gold spreads are 0. For my broker it's 0, but for safe you can put your stop loss over here, okay? So it doesn't matter. So I took this, and where is the order block? Yeah, say
on both of fair value gap.
Yeah, the both are the fair value gap. You can take trade over here also, but your stop loss will be big, right? So I'm trying to
No,
looking for the,
I will be take on the top one, like the star. You see this one?
over here.
Left,
Here.
candle left, one more left,
Yeah.
and this will be my candle. No, that
Yeah,
one. Yeah.
you can take trades over here.
I will be always take the candle which one is above of fair value gap.
Yeah, but sometimes you will be missing them also. But it's okay.
Yeah,
Like
yeah.
it's
Yeah.
on the basic of like how people trades, right? Everybody has their own style. Just so see over here. So now what's the order block? I told you, right? 2 consecutive upward candles in bearish
Yeah.
market. So these are the 2 order block, right? We have to little bit like zoom in this, and then we will be able to see this, because we know our daily analysis, our 15-minute analysis and 1-minute analysis. So on this gap, when we saw it got filled, we took trade over here. Okay. And we can put our stop loss above this to be too much safe. Like it will be too much. Then you can forget about the trade if you have stop loss over here. Or you can put your trade stop loss over here, or sometimes people are little bit, so you can put A over here. It's like curve of pips, little not more than pips. And then what our target will be, okay? You can target this sell side.
Sell side liquidity.
Yeah, but it's not the all, right? It's not nothing like this. We know that this is sell side liquidity, but we should have a good target where we know how to exit. We are not like other guys, like they don't know what's happening in the market. We know everything which is happening in the market. Okay, we know all story behind it, right? So see over here. So here comes the mark which I do. This is the daily open over here somewhere. This is the daily open, right? Over here, can you see this? This is the daily open over here. So I mark it daily open. I know. And then midnight New York open, you will have to mark this. Okay, like every day mark this, and you should know what's your. Wait, I will tell you.
Yeah, how you have the straight line which one show you the open the day?
See, I will tell you about these lines. Okay, like listen carefully. This is see time below. What's time below? 27 May 22:00. It's midnight New York. Okay. So we have to mark the candle over here, which is opening. Okay. And another line will be, and I'm telling what's the logic behind this. Okay. Like see, and you have to mark this one over here, the daily open, the daily over here. The
how you do it? How you can see the line and then which one show you open the day?
It's like see, you zoom in this. Okay. Just zoom and mark.
Yeah, I know. I mean the line which one show you the gray one. He show you the open the day already.
Yeah, this line.
No. Left. How you mark it the open the day? Yeah, that line. How you do that?
This line was a session break. You have it on your trading view?
No, I don't have it.
Man, just fix just open your trading view settings and fix this.
Yeah.
And
how?
Just seeing, do like this. Go on this.
Yeah, okay. Wait, I'm jumping now. I go straight away. I do that. Settings. And
wait. Over here on appearance, go on appearance.
Yeah.
And then this, click on this over here.
Oh, yeah, I see now.
And click OK, right? So you can know where the market is. The new candle is opening. So candle opened over here. Okay.
Yeah.
So we will mark this candle and we will mark this candle. Why we mark this candle over here? This opening candle?
Because this is open the New York.
New York midnight open. Okay. So we know our target will be below this line because this is the daily open. And we know that price is consolidating on the fair value gap, which was above here on daily time frame. Right?
Yes.
So we will target over here. We might have targeted below this, but that's swing trading because it will take time to go over there. It can go on Monday, like it can go below this or below this on Monday, but see. And now comes the discount and premium zone. Okay. So you know the essence of this, like why this is. Look like on daily time frame. Okay. On daily time frame, you know that this is bearish. Okay. And when the market opened, the price was going up, but on daily, you know, it's bearish. right?
Yes.
And you can see previous day high. This was the previous day high, right?
Yes.
It went previous day's high, and then it went into so much liquidity, and it built the liquidity over here. So on this trade, you can risk $2,000 because this is the like 90% trade. Like in SMC, this is the 90% one. Like at 90% of time, you will be successful, like in this type of trades. So you know the daily bias is bearish, and but market is going up in 1 minute time frame and or 15-minute time frame. So over here, it is above this line, above New York Open, right? This is premium zone. Over here, market is too expensive, right? So market won't have to come back, and then it will start its rally to the upside, but it's too expensive. And below this line, right, it's cheap. Market is cheap over here. Okay, so it's premium. This zone, I should mark it. Wait, this zone is premium. Okay, above this line, and this zone is discount. You will not see for sells over in this zone. Don't look for sells over here, because it will like go and hit the stop, because it's in discount. Like it's in the discount zone. We know it's bearish, but it's in the discount zone. It will have to do something like this on premium, then sell it on premium, then you can go back to the discount. Okay?
Yes.
So we know that this price is on premium, and we took our trade over here, and then comes the fib, like where the all move started from here, right? Just point it and just take your fib to this. And now we know we will have to close our trades below this 50%. We have to close our trade below this. So below this, we can see only this liquidity. Okay. So we will take our, and yes, it's clear 10-hour trade. So this was a 10-hour trade. Okay, so this was the first trade which I took. Then I exited over here. Then I know that market is in a discount zone. What? Market is in a discount zone. So now I will look for a scalp over here when you know it's bearish, right? So it's probably you should not trade over here. You should be happy with this 10-hour, like these type of moves. And hardly it took like how much time it took. You only see 1 minute, 2 minute, 2 minutes, 3, 4, 5, 6, 7, 8, 9. 9 minutes. In 9 minutes, if you put it like 1,000, it was 10,000 in 9 minutes. So, but if you want to do little bit of scalp and you want it to get filled, as you can see the order block. Okay, so this trade is done. Okay, so I am removing it. Now, government is the perspective, you are over here. And you can see that there is a lots of imbalance. Over here, it's imbalance. Over here. Can you see the order block? In this leg over here, can you see the order block?
Yes. Yeah, it's on top.
This?
Those three.
And now you will be thinking that why it went over here, right?
What's up?
Hello?
Yeah, my wife told me, asked me that. Wait a second. Co potrzebujesz? Okay, yeah, I'm back.
Yeah, so you might be thinking that why it went above this, right? Because it's an order block, so why it can go above this, right?
Liquidity.
Nah, it's not a liquidity. Like see, over here, every gap was filled in this leg. As you can see, every gap was filled, and then it shot down. So price has a little bit of room to move around. This area is a place where price can move around. Okay, it's the order block, it's a valid order block, but price can move around in this area. If price broke this high over here, okay, like I should remove, if price broke this high, then you can easily go for bias. Then don't touch the market, it's on indecision, because we know it's bearish on daily time frame, right? So but market is going above the previous day, like the high of the day, it's going up in New York session. So you should not touch this market. You should go on another pair and try it, because we are already plus 10-hour over here. Okay, so we will not take trade over here like that only, that we will put our sell limits over here or somewhere else, like over here, and we will put our stop loss over here. Not like that. It's risky. You can do that when you will be having experience, but it's risky, right? So we will look for another fair value gap to take the trades. Okay, now It went up. Okay.
Mm-hmm.
It came down and broke this low. Can you see it? Like over here
Yes.
also we will have to zoom it because it's 1 minute time frame. You cannot see it like this. You have like a small, like you cannot see gaps in like this, right? So you will have to be on desktop and you will have to see it clearly, because it's in phone it's little bit difficult to see, but on phone you can also see, right? But I will prefer you to use desktop. So see, it broke. So over here in this leg, where is the fair value gap? In this
That
leg,
small one. Mm-hmm.
where is the fair value gap? Tell me, like I will mark it.
On 920.
Here,
Here's, yeah.
one fair value gap is over here, and another is here. Okay, and another one is here also. So when we have like these many gaps, right? So when we have these many gaps, we are a little bit confused, right? Because so we will, at these moment, we will take the highest gap. Okay, the gap which is highest to be in a safe position, right? So we will take our cells. We will just put you might be got tagged in this one only. When this candle closed, then you should put a cell over here. Nah, wrong. I said, yeah, man. Sometimes I also get confused. So see how confusing it is. You will not get in one class or two class. This is short term high. This is the theory of short term high, short term low, intermediate term high, intermediate term low. I am not telling these phrases because it will confuse you, right? So I am trying to put it in easy language so you can understand. So we will not put over here because it didn't broke any structure over here. When it broke over here, then we will see and we will put our cells over here, and then we will put our stop loss above this candle. Okay. And now comes our this is a premium zone, and it like now see for the I should remove this, the daily one, right? Now see, remove this. Yes. Now can you see the imbalance over here? An imbalance over here. And can you see the order block in this leg?
Yeah, that one. Yeah.
And now over here also, the example which I gave it over here, that price can roam because over here you can see the liquidity, clear liquidity. So we will not consider this order block, kick this order block. We will not consider this order block. Okay. We will look for this, like this is a juicy, like this is a very good sell side liquidity over here. We will not take this low because it was the impulsion and it was not done by the algorithm. It was done by the manipulators of the market and the banks. Like these type of candles, when you see like these, one wick, one candle up and another candle down, don't consider these candles. Okay, it's like a false move. This is done by banks to do a little bit scalp and make their profits of the month or week. So it took the liquidity and then it started consolidating. So we took our trade to this liquidity over here. It's 11-hour trade right there. And it doesn't mean like we took a trade over here and now we should be like, okay, we should see if we should go for 10-hour. The market is making structure every time. Okay. So over here you can see there was a gap. Over here there was a gap. Okay. So there was a gap. Can you see it? But we will not take our trade over here. Why? Because it did not broke any structure. We want to see like to go and break this, right? We want to see some short-term break of structure like which happened over here. So it went up and then it broke it down. Then it means it broke this structure. Short-term low is broken, right? And then it comes up. Then you can see the sell side liquidity over here also. This is the scalp one. This is the last trade which I gave. The first one was this leg. Second one was this leg. Like, can you see I didn't took a buy. I can take this, but this risky. So I didn't give out the signal or told them to take. I didn't give the signal. I just told them like, I'm looking over here. You all should keep your eyes on over here, right? Because I don't want them to be independent on me. I want them to be successful by themselves. Like they will be like a handicap trader if I give them signals. So see, over here there is a gap and there is an order block. This was my last trade on Saturday. Order block over here with the fair value gap and with the breakout structure. This is the golden trade, right? Over here, when three things are over there, order block is also there, fair value gap is also there, and plus the low is also taken, the king low. I will give all these phrases on next classes, the king low, short, intermediate term, high, low, but take it as a low, okay, right now. So you will take your sells over here and you can put your stop loss this candles above, or you can put your stop loss above this, because this is the king high, because above this it broke. Because of this high, this leg came in to the market. So from here you can go for this liquidity. So how much it is, how much risk reward it has? 6R over here, 11R over here, and another 10R was over here. So 27R in a day.
A lot.
Yeah, so 27R in a day. So this is the analysis, and fair value gap always gets respected. You can see it's getting respected over here also. You can get it's getting respected over here also. And which fair value gap is not getting respected? Like say like this gap is not getting respected because it is a buy side gap. Like this gap can be responsible for the buy. Like you can see that this move from this, but it does not get respected. Why it's not getting respected? Because on daily bias it is bearish.
Yeah, bearish, yeah.
So we will consider only sell gaps, like the gaps which are responsible for sells. We will only take those gaps, right?
Yes.
And the liquidity. Yes. So here's all. So I gave, like I told you about the sell side, buy side liquidity, right? And the daily open, which I told you, and then midnight New York open, and the premium zone and discount zone, right?
Yes.
So this is the basic which we are done right now.
Yes.
So this is enough for you to not go in live markets. You can do it as a back testing or demo it, right? Because at the beginning you need some little bit of confidence and experience, right? Because me also, I learned this like for 6 months. Everything has its own story. It's not like some indicator or something like that. I'm not relying on any indicator which tell me. I just put this Asian session indicator to know that which session is going on. That's why. Otherwise, no indicators are needed. Nothing. Just this is a pure price action. Just read the price, because price is the only thing over here.